aware that's happening. I'm getting into Mind Tap. I don't know if you guys are already there, or so you could follow along, or.
Yeah, I'm already in Mindtap.
Okay. Let me show you my screen. Oh, can you guys see my screen at all?
It just says that it says you're presenting to everyone. It doesn't show like the Mindtap yet.
Oh. I wonder why not. Okay, maybe I won't do this. Okay, here we go, I hope. Did you do my Mind Tap yet?
Yeah, I can see it now.
Okay, perfect. Okay, I'm going to chapter 8. This is the last chapter for the rest of the trimester. And I got rid of the challenge problem, so we can just work on the working together and stuff in here. So I'm loading working together 8-1, and it brings up the working papers. Things are a lot slower at home than they are at school. You guys surviving this being away stuff?
Slowly, but I'd rather be in school.
Yeah, so would I.
I'd rather be in school also.
It's just hard
good,
to
Morgan, I can hear you.
Do it.
Yeah. Okay, this is 8-1. It says complete the worksheet of Fix It Now for the month ended April 30th, the current year, or given in the question assets. On page 8 of the general journal, journalize the closing entries. Okay. This is a worksheet, so we're going to get our information from this worksheet here. And we're going to close what's called the temporary accounts. So, and they're pretty easy to remember. Anything below income summary, including income summary, are all temporary accounts. Like cells, you would not want that balance to carry over into the next fiscal period. So you want to close it, meaning we want to have it a zero balance. And so what you do to journalize that now, this is going to be our closing entries. Oh, they already did the title, closing entries. So this is going to be the 30th. And we're going to close cells first. And cells up here has a credit balance. So we're going to debit cells. And then we're going to credit income summary. And it is for, I can't remember the dollar amount, $21.60. So it's going to be $2,160 debit to cells and $2,160 credit to income summary. So that'll actually give it a zero balance. So if I went down, we'll do it later, I guess. If I went to my ledger and posted that information, that would actually close it out with a zero balance. So the next account I want to close is all of my expenses. Let's see, they have debit balances. So we're going to credit them to make them have a zero balance. So on my journal, I'm going to put them all in income summary. So I'm going to debit income summary and then credit my expense accounts. So let me see if I can pull this down to the side of me somehow. Or maybe not. Anyway, I'm going to start with advertising expense, then cash short and over, and then insurance expense. So this is advertising expense. And it's going to be a credit for 460. Then I'm going to put cash over and short right below it, and cash short and over, and that was $6. And then the next account is insurance expense and the miscellaneous expense. So insurance expense and miscellaneous. You teach me how to spell miscellaneous. And insurance expense was 125 and then 189. I'm taking it from the income statement columns. Uh, 125, 189. And then the account after miscellaneous expense is supplies expense and utilities expense. And then utilities. Utilities expense, and their credit is going to be 153 and 550. Are we okay so far?
Yeah, I'm just waiting. Okay, there it goes.
And so if I add it up, okay. So now I just add up all these credits I put in there because I did all of these expense accounts have a debit balance. So if I do a credit, that'll actually make them have a zero balance. So if I add this total up, and since it's already done this on my worksheet, right here where it says total here 1,483, that's my debit, 1,483. Is that what I said? Ooh, not 14,000. Okay, and that's just these added up. So that'll actually close out my income summary account. That'll actually close out all the expense accounts. And so now I need to close out my income summary on there and there. So, and right now it has a credit balance. So I'm going to do income summary. And I'm going to put it into my capital account. Let me see what that count is. It's Connor Whitney Capital. And what that is net income of 677. Okay, because if I took the 2160 minus the 1,483, and then that'll actually zero out the income summary, it puts that balance into the capital account, which means it grows, increases on there. Okay. And the last one, there's one other account which is temporary, is the drawing account. So, and it's right here for 1,700. So I want to make that have a zero balance. And that has a debit balance, so I'm going to put it into capital. And that actually decreases the capital count. And then I'm going to credit the drawing account, and that will give it a zero balance. And that's the closing entries right there. And so it's taking the temporary accounts that we want to close, make sure they start with a zero balance in the next fiscal period. Is what they're doing. This is what we're doing. So let me grade this, see if I did it right. Did I do it right? I did do it right. Okay. So can you guys see that okay?
Yeah, I can.
Yeah, I can see it.
Okay. Does that make sense on what we're doing?
Yeah.
Yeah, it does to me.
Okay. Yeah, we just want to make sure we start the next fiscal period or the next accounting cycle with a zero balance, because you would never know how much money you made for each month if you don't zero it out. You don't know if you made money or if you lost money, and this is what we do, the next one. So if we go to the next step, and this will kind of show us what it really does. Here's all the journal entries. And we're just going to post the amounts like we did. So on line 7, where sales is a debit of 2160. If I open the ledger called sales, it's the 30th of April. I'm pulling the information from, looks like page 8 of the general journal. So it's G8, and it's a debit balance of 2,160, which gives me zero balance in it. So it's ready for the next accounting period. And then this account number 410, this in my ledger, in my journal, excuse me, in the post-reference column of my journal. So it has a debit, so it's zero now.
So do you have to put?
So if I go to the next slide, income summary.
Do you have to put a balance on it on the debit
Do
side?
I have to do what now?
Like under sales, do you have to put a balance on the debit or
Yeah,
credit?
because you put zero on both the debit column and also the credit column.
Okay.
And you don't need to do this in real life, but we do it because MindTap will mark it wrong.
Okay.
So that's why you put a zero in debit column and zero in the credit column. Good question. So income summary is the next one. This is April 30th. Whoops. Guess I need the period. April 30th. It's G8 we're pulling the information from. And it was a credit of 2,160. Gives me a credit balance of 2,160. So, and then the 330, which is the account number for income summary, goes in my journal up here. It's 330. And then I have a debit now of 1,483. And I can go to the 30th, it's G8. It's a it's a debit of 1,483. I think that's right. Yeah. Which gives me a new balance of 677, a credit balance. So the 2160 minus 1,483 would give me a credit balance of 677. Okay. And then I put the 330 in my post reference up here. And then I can go through and do all of my expense accounts, close them out to 0. So, and they have all our credits. So if I go to advertising expense, it's also on the 30th. We're pulling this from G8, and it's a credit of 460, but I have a debit balance. So the 460 minus 460 is 0, debit, and I put a 0 in the credit column, 0 like that. And then the 510 is what I put in my post reference column of the journal. Okay. So there's advertising expense with a 0 balance. If I keep going with the next one, cash over and short, I think you're getting the idea of this, I hope. And do a credit of $6, has a debit balance, now it's 0 too. And then the 520 is the account number for cash short and over. And I put 520 here. Okay. So now I'm just going to go a little bit quicker now. So we're doing insurance expense. It's coming from G8. It's a credit of 125. It has a debit balance of 125, so the two will zero it out. And so now insurance expense has a 0 balance. And if I did the same thing to miscellaneous expense, post reference is G8, it's coming from General Journal, page 8. It's a credit of 189. 189 minus 189 is a 0, so now it has a 0 balance, and that is closed. That's considered a closed account. The same with supplies expense, G8, and it's a credit of 153. Gives me a 0 balance now in it. And utilities expense is my last one. It's G8 as a post reference. There's a credit of 550. And so 550 minus 550 is a 0 balance. And so now all of my expense accounts have been closed and they have a 0 balance. So and then my post reference is the account numbers in my general journal. So supplies, expenses. So now all of those are closed. Okay. Are we okay, or did I go too fast?
Nope, I'm good.
Okay. If I keep going to the next line, income summary, which we've been in there before. It's the 30th. It's G8. This actually closes it. Has a credit balance. If I do a debit of 677, that'll actually close the income summary account to 0. And in 677 is the income, is net income. And then 330 is the post reference for it. Then the capital account is the other one affected by closing. So we just close the income summary and put it into the capital account for 677. which means I gotta take the balance, the credit balance here, a 7,443 plus the 677 gives me a credit balance of 8,120 in that one. And then the 310 is what I put here. So, and then the next line is capital account has a debit of 177. So I'm still in capital. It's the 30th. Reference is G8 for General Journal 8. It's a credit of 1,700. And so I take the 8,120 minus the 1,700. Gives me a new balance of $6,420. Oops, what did I do? Oh, clicked on the wrong thing. Okay, so there's my ending capital balance now, 6,420. Post references up here, and the last one is the drawing account for 1,700. So open the drawing account. It's 30 G8. It's a credit of 1,700. Now it gives me a zero balance. So we're ready to start. So we're ready to start the next accounting cycle on there. And that's the closing entries. Does that make sense?
Yeah, it does.
Okay, so that's closing entry. We close out the next accounting cycle or next fiscal period, and it looks like that one I missed one. What did I miss? I don't see what I did wrong. Oh no, I got it all right. So that makes, okay. Hopefully that makes sense. Makes it easier for you to do the closing entries. And then the last, I'd like to do working together 8-2. So I'm going to go there right now. If I remember right, this is a has all the ledgers and stuff with it. Okay, I don't know if you're there yet.
I'm
Are you
here.
okay to keep going, or?
Yeah, we're
Okay.
good.
Yeah, I'm good.
Okay, good. Indicate which accounts appear on the company's post-closing trial balance. Check all that apply. So we know all the permanent accounts will be on the post-closing trial balance. All the temporary accounts will not be on there. So I'm going to check cash, petty cash, the accounts receivable, supplies, prepaid insurance, accounts payable, the capital account, the drawing account would not be on there. Income summary would not. Sales is not. Advertising expense, cash short and over are not on there. In fact, all of the expense accounts are not on the post-closing trial balance because they have a zero balance. So let me grade that. And we got them all right. So if I go to the second step, I'm going to do a post-closing trial balance. And notice there's all my accounts on there. So I just open up cash. I see it has a debit balance of 4,900. So I put 4,900 for cash. Petty cash has a balance of $75. So I put 75. Accounts receivable is an asset account, and it's a customer who owes us money. A good customer, so 1,887. $1,387. Supplies is also an asset, and it has a balance of $75, it looks like. Prepaid insurance is also another asset, has a balance of $250. Accounts payable is a liability account. It's a vendor we buy our supplies from. Looks like it has a credit balance of $267. And the capital account is the last one. It's 6,420. So I just need to add those two columns up. So 4,900. Guess I got to turn my calculator on. 4,900 plus 75 plus 1,387 plus 75 plus 250. I get 6,687. And if I add the credit column up, the 267 plus 6,420 should give me the same balance. It does, $6,687, and it balances. And that's it. That's a post-closing trial. If these numbers did not equal each other, then we have a problem. We'd have to go find our error or mistake. But since they are the same and we're in balance, we assumed everything's correctly. So we're good, and we're good to move on in the next cycle. Are there any questions at all?
No, I don't have any.
Okay. All right. If there's not any questions, I'll let you guys go. That's chapter 8. You should be able to, we did the work on your own for working together, and then you should be able to do the application problems. And that's the last problems for the rest of the trimester. So once you finish that, you should be okay. And then there's also a couple of Canvas quiz, which will let you take them over and over again as many times as you like. So other than that, have a great week and a great summer if we don't see you again or talk to you again. This is hard, doing it this way, but hang in there. Hopefully we'll be back to normal next year. So, all right. We'll see you guys.
See ya. Thank you.
Thanks. I'll post this up so people can read it if they need to, or watch it again, I guess. So.
Sounds good.